Welcome to the Paragon Financial Partners Podcast, where we discuss the markets, our strategies, and how to live better today while planning for tomorrow. Hello, and welcome to the Paragon Podcast. I'm here with Evan Shorten, the firm's founder and principal.
Hello, this is Evan Shorten, and I want to thank everyone for tuning in to this episode. If you would like to listen to our previous episodes, you can do so at paragonfinancialpartners.com/media. To subscribe to our podcast, you can find us on iTunes or Stitcher Radio.
So today we want to talk about the market and provide an update of what has been going on lately. We saw both the S&P 500 and Dow Jones hit all-time highs in the second half of July and maintain their gains despite increasing uncertainty in both the U.S. and abroad. We're seeing the price of oil constantly fluctuate depending on daily news, low gross domestic production in both the U.S. and Europe, and as of now, none of this seems to affect the markets. Evan, what's the consensus behind the rise in equity markets?
So there are a number of reasons why we're experiencing this market rally. With the 10-year U.S. Treasury yield down to 1.52% as of Thursday, August 18th, we continue to see investors seeking income from dividend-paying stocks. Investors are trying to find yields, and the bond market is not providing enough of it. We can actually see this playing out by the fact that Vanguard has closed its dividend growth fund to new investors. The fund saw an increase in cash inflows of over $3 billion in the last 6 months, and that's just crazy. Additionally, we had an earnings season with a lot of major companies reporting good results. Companies like Amazon, Google, Alcoa, MasterCard, Wells Fargo, Facebook, and many others have posted solid earnings when they reported 2 weeks ago. While we're not advocating or recommending these stocks, we just want to make the point that large companies that make up the main equity indices did well, and that provides a certain level of investor confidence. Additionally, trading volume is down due to summer months, with the end of August typically being the period of the year with the least amount of trading volume. The last thing I want to mention with regards to the most recent market rally is that uncertainty in China and Europe are pushing investors into U.S. equities. There has been a lot of economic data coming out of China depicting a broad slowdown, along with increasing debts as the Chinese government tries to stimulate the economy. Additionally, Europe continues to experience economic problems with Greece and Spain, slowdowns in France and Italy, combined with Italy's weak banking sector. Simply put, investors, both domestic and foreign, feel a sense of safety in U.S. equities compared to the international markets.
Okay, since you mentioned foreign investors, do you think foreign investors are having a large impact on the U.S. markets overall?
Yes, and it's not just foreign investors seeking safety in the U.S. equity markets, but also U.S. bond markets. One of the reasons we have seen the 10-year Treasury continue to come down is because of an influx of foreign investors seeking both safety and higher yields.
Higher yields? I think a lot of our listeners might think that sounds funny. Foreign investors putting their money in the U.S. due to higher yields.
Well, yeah, it sounds somewhat weird to say it out loud, but ironically, as we deal with historically low yields in the U.S., many developed nations actually have much lower yields. A few countries like Denmark, Germany, Japan, Sweden, and Switzerland actually have negative yields at the moment. Essentially, the U.S. is giving foreign investors a balance between safety and yield that is becoming increasingly difficult to find in the developed world.
Okay then. As we mentioned in the beginning, oil has been fluctuating whenever any news comes out. As of today, Friday, August 19th, oil is around $49.50, which is an increase over the recent $40 per barrel mark. How does this affect U.S. equity markets?
While no one can predict what's going to happen in the market tomorrow, I'm not sure that oil will have too strong of an impact on the markets. Obviously, if oil prices held steady, it would help calm investors. But again, there's a lot of hunger for yield. We've been in rally mode since February, and the markets have leveled off a little bit in June and then rallied again in July and have maintained. All this occurred during oil price declines. When the price of oil went down to the price of, $40 a barrel? Equities are behaving somewhat independently of oil, and again, the hunger for yield and relative safety seems to be the driving factor. Unless the Federal Reserve raises interest rates by a meaningful amount, which I believe is highly doubtful, the current condition pushing investors into equity markets are likely going to continue. The major thing we took away from this past Wednesday's Federal Reserve meeting is that the Fed is divided with respects to interest rates, and as long as the Fed is divided, rates are likely going to continue to stay at current levels. I also want to emphasize that investors should invest in a broadly diversified manner and not focus too much on short-term movements. With the upcoming election, we are bound to see more volatility in the markets. And just because oil is down or there is sentiment about the equity markets being too hot, a potential bond bubble, etc., being broadly diversified over several asset classes with a long-term view is going to be a prudent strategy. Don't make any haste decisions based on the news of one day. I'm confident the news and the media will report about something completely different 2 or 3 days later.
Okay, great. Thanks for the insight, Evan. We hope you enjoyed this episode of the Paragon Podcast. If you want to listen to more of our episodes, please visit our media page at paragonfinancialpartners.com/media. Also, please subscribe to this podcast on iTunes or Stitcher Radio. And again, thank you for tuning in.
Yes, thank you very much.
Paragon Financial Partners, Inc. is a registered SEC investment advisor. The broadcast is for informational purposes only and should not be considered as a solicitation or offer to purchase or sell securities. The financial strategies and guidelines discussed herein may not be appropriate for everyone, as each individual circumstance is unique. Please review all tax information with your tax professional. Please review all legal information with your legal professional. We hope you enjoyed the Paragon Financial Partners podcast. And again, thank you for listening.